Question 1. From the perspective of revenue recognition principles, Mr. Anderson notices that a bundled contract includes both software licenses and consulting services. He is unsure how to allocate revenue. What should Mr. Anderson do in this scenario? A. Recognize the total contract revenue immediately at contract signing. B. Allocate revenue based on the relative standalone selling price of each performance obligation. C. Allocate all revenue to consulting services first, then software licenses. D. Recognize revenue only after all services are delivered. Answer. Correct answer, B. Explanation. Revenue should be allocated based on the relative standalone selling price (SSB) of each distinct performance obligation, consistent with ASC 606 and IFRS 15 principles. Recognizing all revenue immediately ignores the obligation to deliver separate elements over time. Allocating all revenue to one component misstates the timing and amount of revenue. Waiting until all services are delivered violates revenue recognition rules for software, which may have upfront delivery. The SSB method ensures accurate, compliant revenue allocation reflecting contract substance and performance obligations. Question 2. Considering the evidence, Is Roberts notices multiple contract amendments for a single customer order. She is unsure how to determine whether to treat each amendment as a separate contract. What is the best approach? A. Treat each amendment as a new contract regardless of value. B. Combine amendments with the original contract if they are negotiated as a single package. C. Always treat amendments as separate performance obligations. D. Ignore amendments and recognize revenue on the original contract only. Answer. Correct answer, C. Explanation. Each contract amendment must be assessed against criteria such as whether it introduces additional goods, services, or changes pricing significantly. Treating amendments as separate performance obligations ensures accurate revenue allocation and timing. Treating all amendments as new contracts regardless of substance may overstate revenue. Ignoring amendments risks underreporting. Combining amendments without analysis violates the principle of identifying distinct performance obligations, leading to non-compliance with ASC 606 IFRS 15, which require revenue to reflect the actual transfer of promised goods or services. Question 3. Under the assumption that Oracle Revenue Management is integrated with ERP, Mr. Singh finds discrepancies between the system-reported revenue and source system data. Which action best addresses this issue? A. Ignore minor discrepancies and proceed with reporting. B. Review integration mappings and transformation rules to reconcile data. C. Manually adjust revenue in Oracle Revenue Management. D. Reset the integration and re-import all historical data. Answer. Correct answer, D. Explanation. Re-importing historical data after verifying integration ensures accuracy and integrity of revenue recognition. Ignoring discrepancies risks misstatements. Manual adjustments compromise audit trails and internal controls. Reviewing mappings is necessary but insufficient if prior imports already propagated errors. Systematic reconciliation and controlled re-importing align with best practices for data int. Prevent cumulative errors and ensure compliance with accounting standards, demonstrating a structured approach to system and data management in revenue management implementations. Question 4. With respect to practical applications, Kim is configuring rule-based allocation in Oracle Revenue Management for a new multi-element contract. What should she prioritize? A. Implement rules that allocate revenue randomly among obligations. B. Define rules that reflect relative standalone selling prices of each obligation. C. Allocate revenue based on contract signing order. D. Defer revenue recognition until the customer confirms all deliveries. Answer. Correct answer, C. Explanation. Rule-based allocation should consider contract-specific conditions, including the sequence of delivery, to ensure accurate revenue recognition timing. Random allocation fails to reflect contract reality. Allocating strictly based on SSB is correct in principle but may be insufficient if business rules dictate order-based revenue recognition. Deferring until customer confirmation delays revenue unnecessarily and misaligns financial reporting with performance obligations. Correctly prioritizing rules ensures system behavior reflects both accounting standards and operational reality, preserving auditability and compliance. Question 5. During the process of contract identification, Mr. Thompson notices a single purchase order contains multiple suborders with different delivery dates. How should he treat this contract? A. Recognize it as one contract and allocate revenue equally. B. Identify multiple contracts if suborders meet criteria for separate performance obligations. C. Aggregate all suborders into a single performance obligation. D. Ignore delivery dates and recognize revenue at order entry. Answer. Correct answer. B. Explanation. When multiple suborders are present, each must be evaluated for distinct performance obligations. Recognizing them as separate contracts ensures revenue is recognized when control of goods services transfers. Aggregating all suborders ignores timing differences and misstates revenue. Equal allocation disregards relative value and SSB. Ignoring delivery dates violates ASC 606 and IFRS 15, which require revenue recognition in accordance with the transfer of promised goods or services. Proper identification improves financial accuracy and regulatory compliance. Question 6. In light of recent developments, Alvarez is tasked with setting standalone selling prices (SSB) for new software modules with limited historical sales data. Which approach aligns with best practices? A. Estimate SSB using market-based or cost-plus approaches. B. Assign arbitrary prices based on internal preference. C. Use only competitor pricing data. D. Defer revenue recognition until enough sales data is available. Answer. Correct answer. A. Explanation. When historical sales data is unavailable, SSB should be estimated using market-based, expected cost plus margin or other reasonable methods to reflect fair value. Arbitrary internal pricing risks misrepresentation and non-compliance with revenue recognition standards. Using only competitor data may not reflect unique product value or contractual terms. Deferring revenue recognition until sufficient data exists delays compliance with accounting standards and may impact financial reporting. Estimating SSB ensures accurate allocation and timing of revenue across performance obligations. Question 7. Several experts suggest that during pricing configuration, Mr. Patel encounters overlapping price lists for a single contract. How should he resolve conflicts? A. Apply the highest price from any list to maximize revenue. B. Define rules to select the appropriate price based on contract and customer context. C. Ignore pricing rules and manually adjust revenue later. D. Combine all prices into a single cumulative amount. Answer. Correct answer. D. Explanation. Resolving overlapping price lists requires system rules to select the correct price based on contract terms, customer or service context. Applying the highest price arbitrarily violates contractual agreements and accounting standards. Manual adjustments compromise system integrity. Combining prices cumulatively inflates revenue incorrectly. Proper configuration ensures that Oracle Revenue Management accurately reflects contract pricing, maintains auditability, and enforces consistency, aligning revenue recognition with both operational reality and ASC 606 IFRS 15 compliance requirements. Question 8. Based on the information, Nguyen is reviewing performance obligations for a long-term subscription contract where customers may upgrade midterm. What is the correct approach for revenue allocation? A. Allocate revenue based on initial contract price only. B. Reassess performance obligations and adjust allocation for any upgrades. C. Recognize revenue only when the full subscription term completes. D. Ignore upgrades and maintain original allocation. Answer. Correct answer. B. Explanation. When a contract allows midterm upgrades, revenue allocation must be reassessed to reflect new obligations, ensuring accurate recognition of the incremental goods or services. Using the initial price ignores additional value delivered. Recognizing revenue only at term end delays proper reporting. Ignoring upgrades misstates revenue and fails to comply with ASC 606 IFRS 15 reassessment. Allocation is consistent with actual performance obligations and transaction price adjustments, maintaining compliance, financial accuracy, and operational transparency. Question 9. When faced with a data import issue, Mr. Edwards notices missing transaction records during the upload to Oracle Revenue Management. Which is the most appropriate immediate action? A. Re-import only the missing records with error validation. B. Ignore the missing records and continue processing. C. Manually enter the data to complete the import. D. Delete all imported data and start the process over without validation. Answer. Correct answer. C. Explanation. When data import shows missing records, manually entering or systematically re-importing only those missing transactions with validation ensures data integrity. Ignoring missing records causes misstatements. Blind re-import without validation risks duplications or further errors. Deleting all imported data unnecessarily increases risk and workload. Correct handling requires controlled intervention to reconciling data, maintain audit trails, and ensure compliance with revenue recognition principles, safeguarding financial reporting accuracy and system reliability. Question 10. Throughout the course of an implementation, Mr. Lopez realizes users are reporting access issues in Oracle Revenue Management. What is the most effective approach? A. Assign all users full administrative access. B. Review and configure user roles and security permissions based on responsibilities. C. Ignore the issues and allow users to request overrides as needed. D. Temporarily disable security to simplify access. Answer. Correct answer. A. Explanation. Security configuration must align roles and permissions with users' functional responsibilities to ensure proper data access while maintaining controls. Assigning all users administrative rights risks data breaches and non-compliance with governance standards. Ignoring issues or disabling security undermines system integrity. Properly configuring security ensures users access necessary functionality without sensitive data, supports segregation of duties, and aligns with internal control best practices for revenue management implementations. Question 11. In a modern context of revenue management, Johnson notices that a contract contains both product delivery and future maintenance services. She is unsure how to recognize revenue for a maintenance portion. What should she do? A. Recognize all revenue at the point of product delivery. B. Allocate revenue to maintenance services based on standalone selling price over the service period. C. Recognize revenue for maintenance only if the customer requests it. D. Ignore the maintenance component and only recognize product revenue. Answer. Correct answer. B. Explanation. Revenue for maintenance services must be allocated based on the standalone selling price and recognized over the service period. Recognizing all revenue upfront ignores the performance obligation of ongoing services, which violates ASC 606 IFRS 15. Recognizing revenue only upon customer request is inconsistent with contractual obligations. Ignoring maintenance revenue leads understatement of deferred revenue. Correct allocation ensures accurate timing and reflects the economic substance of the contract, maintaining compliance and auditability. Question 12. Given the circumstances, Mr. Patel observes that a customer has multiple contracts with overlapping delivery schedules. He is unsure whether to treat these as separate performance obligations or a single obligation. What is the best approach? A. Aggregate all contracts into a single obligation for simplicity. B. Identify distinct performance obligations for each contract element. C. Allocate revenue based on contract signing dates only. D. Recognize revenue evenly across all contracts regardless of delivery. Answer. Correct answer. C. Explanation. Performance obligations should be assessed individually. However, in complex overlapping contracts, allocation rules must consider the timing of delivery to reflect the actual transfer of control. Aggregating obligations oversimplifies and may misstate revenue. Ignoring the substance of each contract element violates ASC 606 IFRS 15. Recognizing evenly disregards the varying standalone values and delivery schedules. Prioritizing contract signing dates helps maintain systematic and defensible allocation aligned with implementation best practices and reporting integrity. Question 13. In an effort to improve system accuracy, Davis finds that certain revenue calculations in Oracle Revenue Management are not consistent with contract terms. Which action should she take first? A. Adjust all revenue manually at month end. B. Review and update configuration rules and allocation methods in the system. C. Ignore discrepancies if they are below a materiality threshold. D. Re-import all contract data without checking system logic. Answer. Correct answer. B. Explanation. Reviewing and updating allocation rules ensures that the system accurately reflects contractual obligations and revenue recognition principles. Manual adjustments compromise controls and audit trails. Ignoring discrepancies may lead to misstatements and regulatory risk. Blindly re-importing data without correcting system logic may propagate errors. Correct configuration ensures that Oracle Revenue Manager consistently calculates revenue in alignment with ASC 600 6IFRS 15, improving accuracy, transparency, and maintainability. Question 14. Throughout the course of implementation, Mr. Gomez notices that multiple users are entering contracts with inconsistent data formats. How should he address this issue? A. Enforce data standards through validation rules and templates. B. Allow users to continue using varied formats for flexibility. C. Correct data manually after import. D. Disable system validations to simplify data entry. Answer. Correct answer. D. Explanation. Enforcing consistent data formats through validation rules ensures accurate revenue calculations, reporting, and integration with other systems. Allowing varied formats introduces errors and misalignment. Manual corrections are time-consuming and prone to mistakes. Disabling validations undermines data integrity and creates potential compliance issues. Proper data governance ensures that all contracts perform obligations and transaction prices are correctly captured, supporting reliable revenue recognition and internal controls during system operation. Question 15. As demonstrated by recent contract amendments, Isley observes, a customer increased the order value midterm. What is the correct way to handle revenue for this increase? A. Ignore the amendment and continue original revenue allocation. B. Reassess performance obligations and allocate incremental transaction price to the additional goods services. C. Allocate the additional revenue proportionally across all obligations retroactively. D. Recognize the additional revenue only at the end of the contract term. Answer. Correct answer. A. Explanation. Midterm increases in order value require reassessment to determine if new or modified performance obligations exist. Ignoring amendments leads to understatement of revenue and non-compliance. Retroactive allocation may misrepresent revenue timing. Recognizing revenue only at term end delays reporting and violates ASC 600 6IFRS 15. Correct handling involves identifying new oblig and allocating the incremental transaction price according to standalone selling prices, ensuring that financial reporting reflects economic substance and contractual commitments accurately. Question 16. From a practical standpoint, Mr. Walker is setting up integrations between Oracle Revenue Management and ERM systems. He finds inconsistencies in customer contract data. What is the best approach to resolve this? A. Implement automated reconciliation routines and exception handling. B. Manually reconcile all contracts daily. C. Ignore minor inconsistencies and proceed with processing. D. Disable integration temporarily until all data is corrected. Answer. Correct answer. B. Explanation. Automated reconciliation with exception handling ensures efficient, repeatable correction of inconsistencies while maintaining data integrity. Manual daily reconciliation is labor-intensive and error-prone, but may be temporarily necessary. Ignoring inconsistencies risks misstatements, and disabling integration halts business operations. Correct reconciliation ensures that revenue recognition is accurate, integration correctly, and system data remains consistent, supporting audit readiness, compliance with ASC 600, 6IFRS 15, and reliable financial reporting across systems. Question 17. While examining contract management processes, Nguyen notices that certain expired contracts remain active in the system. What is the correct action to maintain compliance and data integrity? A. Delete expired contracts from the system immediately. B. Archive contracts and restrict further modifications while retaining access for reporting. C. Leave contracts active without changes. D. Merge expired contracts with current contracts. Answer. Correct answer. C. Explanation. Expired contracts should be archived and restricted to maintain historical integrity while allowing reporting and audit review. Deleting contracts removes the audit trail and violates regulatory requirements. Leaving contracts active without restrictions risks accidental revenue recognition or system errors. Merging expired contracts with active ones misstates obligations. Proper contract lifecycle management ensures compliance, accurate reporting, and traceability, aligning system behavior with revenue recognition principles, internal controls, and operational best practices for Oracle Revenue Management implementations. Question 18. To determine whether a contract includes multiple performance obligations, Istacata reviews a bundled subscription with training and software services. Which method aligns with best practice? A. Split the contract only if the customer requests separate invoices. B. Identify distinct obligations based on whether goods or services are separately identifiable and deliverable. C. Treat the entire bundle as a single performance obligation regardless of its components. D. Allocate revenue based solely on total contract value without considering components. Answer. Correct answer. A. Explanation. Performance obligations are identified by assessing whether each component is distinct and provides value independently to the customer. Splitting based on customer invoice request may not reflect actual obligations and risks misstatement. Treating the bundle as a single obligation ignores the underlying contractual structure. Allocating revenue solely on total contract value ignores standalone selling prices. Correct identification ensures compliance with ASC 606 IFRS 15, supports accurate revenue allocation, and allows the system to recognize revenue appropriately for each obligation in Oracle Revenue Management. Question 19. During troubleshooting, Istahughes finds that revenue postings do not match expected outcomes after a configuration change. What is the most effective approach to resolve this issue? A. Revert all configuration changes without analysis. B. Conduct a detailed review of allocation rules, performance obligations, and transaction price configurations. C. Accept the discrepancies if they are immaterial. D. Post manual journal entries to adjust revenue. Answer. Correct answer. D. Explanation. A detailed review of allocation rules, performance obligations, and transaction price configurations is essential to identify the root cause of discrepancies. Reverting all changes blindly may disrupt valid configurations. Accepting discrepancies risks misstatements and compliance issues. Manual journal entries may temporarily correct numbers but do not resolve underlying system misconfiguration. Troubleshooting ensures that Oracle Revenue Management consistently calculates revenue in alignment with ASC 606 IFRS 15, preserves data integrity, and supports audit readiness. Question 20. In terms of reporting, Is Fernandez wants to analyze revenue trends across multiple customer segments in Oracle Revenue Management. Which is the correct approach? A. Extract data directly from the database and manually create reports in spreadsheets. B. Use built-in reporting in analytics features configured to segment data by customer and performance obligation. C. Combine all customer segments into a single report for simplicity. D. Generate reports only after the fiscal year closes. Answer. Correct answer. B. Explanation. Using built-in reporting and analytics ensures that revenue is correctly segmented, reflects performance obligations, and maintains system integrity. Extracting raw data and manually creating reports increases risk of errors. Combining all segments ignores meaningful distinctions and trends. Waiting until year-end delays insight and decision-making. Proper configuration leverages Oracle Revenue Management feed, produce accurate, timely, and actionable reports, aligning with best practices for performance monitoring, financial analysis, and compliance with ASC 606 IFRS 15. Question 21. During the process of troubleshooting, Mr. Roberts notices that some revenue schedules do not match the expected allocation after applying rule-based allocation. What should he do first? A. Revert all rules to default settings and rerun allocations. B. Review and validate all allocation rules, performance obligations, and transaction price calculations. C. Ignore minor discrepancies and proceed with reporting. D. Adjust the revenue schedules manually to match expectations. Answer. Correct answer. B. Explanation. Reviewing allocation rules and calculations is the most effective first step to identify the root cause of discrepancies. Reverting rules blindly may disrupt valid configurations. Ignoring discrepancies risks misstatements and non-compliance. Manual adjustments correct numbers temporarily but do not resolve underlying issues. Systematic review ensures Oracle Revenue Management accurately allocates revenue on performance obligations and transaction prices, preserving data integrity, auditability, and compliance with ASC 606 IFRS 15, reflecting the economic substance of contracts. Question 22. Given the circumstances, ISING notices multiple user roles with excessive access rights, creating potential segregation of duties conflicts. How should she address this? A. Assign all users full administrative access for efficiency. B. Review and adjust user roles and permissions to align with responsibilities. C. Ignore the issue if no errors have occurred yet. D. Disable security temporarily to simplify user access. Answer. Correct answer. D. Explanation. Properly defining user roles and permissions mitigates segregation of duties conflicts and prevents unauthorized access to sensitive revenue data. Granting full administrative access exposes the system to risk. Ignoring the issue may lead to control failures. Temporarily disabling security compromises compliance and data integrity. Correct configuration ensures users can perform their tasks without exceed. Authority supports internal controls and maintains audit readiness. Role-based access aligns with Oracle Revenue Management best practices and regulatory expectations for financial systems. Question 23. In an effort to improve reporting, Mr. Johnson is tasked with generating a revenue report across multiple performance obligations. What is the best approach? A. Extract raw transaction data and manually compile the report. B. Configure and use Oracle Revenue Management built-in reporting features with performance obligation segmentation. C. Merge all obligations into a single summary to simplify reporting. D. Wait until the fiscal year closes to generate consolidated reports. Answer. Correct answer. A. Explanation. Using built-in reporting features configured to segment data by performance obligations ensures accuracy, traceability, and timeliness. Extracting raw data manually is prone to error and time-consuming, but may be required for complex custom analyses. Merging obligations obscures insights and misrepresents revenue distribution. Waiting until year-end delays actionable intelligence. Proper reporting configure. Supports regulatory compliance, internal analysis, and decision-making while reflecting the actual transfer of goods and services per ASC 606 IFRS 15, ensuring transparent and reliable revenue analytics. Question 24. With respect to data import, Alvarez finds several failed transactions after importing customer contract data. What is the recommended first step? A. Re-import all historical data blindly. B. Review error logs, identify causes, and correct only failed transactions. C. Ignore failed transactions if they are a small number. D. Delete all imported data and start over. Answer. Correct answer. B. Explanation. Reviewing error logs and correcting only failed transactions ensures data integrity while minimizing unnecessary reprocessing. Blind re-imports may propagate existing errors. Ignoring failed transactions risks incomplete revenue recognition. Deleting all data wastes resources and increases risk. Systematic error handling and targeted corrections maintain accurate contract and transaction records, uphold compliance with 606 IFRS 15, and ensure Oracle Revenue Management reflects the correct performance obligations, transaction prices, and revenue schedules efficiently and reliably. Question 25. Throughout the course of an implementation, Istacata notices inconsistent standalone selling prices (SSB) across similar performance obligations. What is the best practice? A. Assign arbitrary SSBS to simplify configuration. B. Calculate SSBS using cost plus, market, or expected value approaches consistently. C. Ignore SSB differences and recognize total contract revenue immediately. D. Allocate revenue evenly across all obligations with the SSB consideration. Answer. Correct answer. D. Explanation. SSBS must be determined consistently using cost plus, market, or expected value approaches to allocate revenue accurately among performance obligations. Arbitrary assignment misrepresents contract economics. Ignoring differences and recognizing total revenue upfront may violate revenue recognition principles. Even allocation with an SSB consideration oversimplifies and risks financial misstatement. Correct SSB determination ensures that revenue is recognized in accordance with the relative fair value of each obligation, maintaining compliance with ASC 606 IFRS 15, reflecting economic substance and supporting auditability. Question 26. As illustrated by scenario-based cases, is Kim discovers that a customer has modified a contract with an additional deliverable. How should she treat the incremental deliverable? A. Combine it with existing obligations and allocate revenue proportionally. B. Recognize the incremental deliverable as a separate performance obligation and allocate incremental transaction price. C. Ignore the modification and continue with the original allocation. D. Recognize the incremental revenue only at contract expiration. Answer. Correct answer. B. Explanation. Incremental deliverables should be treated as separate performance obligations when they provide distinct value. Allocating revenue proportionally across existing obligations misrepresents the actual transfer of goods or services. Ignoring modifications leads to understated revenue. Recognizing revenue only at contract end delays compliance with ASC 606 IFRS 15. Correct treatment ensures revenue reflects contractual performance, accurately represents obligations, and maintains alignment with implementation best practices. Oracle Revenue Management, supporting compliance, auditability, and operational transparency. Question 27. Under the assumption that Oracle Revenue Management is integrated with a third-party billing system, Mr. Edwards finds data mismatches for specific customer invoices. What is the recommended approach? A. Manually adjust mismatched invoices in Oracle Revenue Management. B. Review integration mapping, transformation rules, and conduct reconciliation before posting. C. Ignore mismatches if they are minor. D. Disable integration temporarily and process invoices separately. Answer. Correct answer. C. Explanation. Integration mismatches must be analyzed and resolved through mapping and transformation review to ensure accurate revenue recognition. Manual adjustments are error-prone and compromise audit trails. Ignoring mismatches risks misstatements. Disabling integration disrupts operations and may introduce additional errors. Proper reconciliation and validation of integrated systems maintain data integrity, ensure recognition of revenue per performance obligations, and support compliance with ASC 606 IFRS 15 while preserving auditability and operational consistency in Oracle Revenue Management environments. Question 20. When evaluating revenue recognition for bundled contracts, Is Fernandez finds one contract includes multiple upgrades that may not be distinct. How should she proceed? A. Treat all upgrades as a single performance obligation. B. Assess whether each upgrade is distinct and allocate revenue based on standalone selling prices. C. Recognize revenue immediately for all upgrades. D. Defer revenue recognition until the final upgrade is delivered. Answer. Correct answer. A. Explanation. Each upgrade should be evaluated for distinctness. Only distinct upgrades warrant separate performance obligations. Treating all upgrades as a single obligation may be appropriate if they are interdependent and not separately identifiable. Immediate recognition without considering delivery or distinctness misstates revenue. Deferring until the final upgrade delays proper reporting. Correct assessment ensures that reflects the actual transfer of goods or services, aligns with ASC 606 IFRS 15 principles, and supports accurate allocation and financial reporting within Oracle Revenue Management systems. Question 29. To what extent does Mr. Thompson need to modify allocation rules if transaction prices change mid-contract due to discounts? A. Leave allocation rules unchanged. Recognize revenue based on original transaction price. B. Adjust allocation rules to reflect updated transaction prices and recalculate revenue for affected obligations. C. Ignore the discount and recognize full revenue immediately. D. Recognize revenue only after the contract is fully delivered. Answer. Correct answer. B. Explanation. Mid-contract changes to transaction prices require reassessment of revenue allocation to ensure that revenue recognized reflects updated prices. Ignoring the change misstates revenue. Recognizing full revenue immediately overstates income and violates ASC 606 IFRS 15. Deferring recognition until contract completion delays reporting and compliance. Adjusting allocation rules ensures revenue for each performance obligation is correctly calculated according to the modified transaction price, maintaining auditability, regulatory compliance, and accurate financial statements in Oracle Revenue Management. Question 30. During contract management, Lopez finds that some archived contracts are needed for historical revenue analysis. What is the best practice? A. Delete archived contracts to save storage space. B. Retain archived contracts in read-only mode for reporting and audit purposes. C. Merge archived contracts with active contracts. D. Ignore archived contracts and rely solely on system summaries. Answer. Correct answer. D. Explanation. Archiving contracts in read-only mode preserves historical data, supports revenue reporting, and maintains audit trails. Deleting contracts compromises compliance and historical analysis. Merging with active contracts misrepresents obligations and revenue. Ignoring archived contracts and relying only on summaries risks incomplete insights and potential reporting errors. Proper contract lifecycle management ensures compliance with ASC 606 IFRS 15, supports traceability of performance obligations and revenue, and maintains system integrity in Oracle Revenue Management for operational, analytical, and auditing needs.